Welcome back, friends. Previously, we discussed in detail the cash flow from operating activity under direct method. Today, let us discuss the second method for identifying the cash flow from operations. Second method, indirect method. As the name suggests, we are finding the cash flow from operations indirectly. Then what is the meaning of direct and indirect? Direct means you just directly take all the cash flow from operations. Basically, operating receipts are added together, and from those operating receipts, you are deducting all the operating expenses. So you are directly adding together all the receipts and you are reducing all the payments. That is known as direct method. In indirect method, you will be finding out the cash flow from operations on the basis of non-operating items. This method is quite easy when it compares to first case, because we already learned how to find the cash flow from operations on the basis of non-operating items in the preparation of fund flow statement. If you remember, we have learned a step where how to find the fund from operation during the preparation of fund flow statement. The same method is followed in the indirect method also. So if you remember that method, you can easily identify the cash flow from operations using indirect method. So let us discuss in detail how you are going to find the value. First of all, under this method, cash from operations are calculated by adjusting net profit. If you remember, in fund from operation, we began with fund net profit during the year. Just like that, we will be following the similar step in the indirect method also. So, from the net profit during the year, you will add back non-operating and non-cash items like depreciation, provision for tax, loss on sale of asset, goodwill written off, preliminary expenses written off, likewise. If you remember, we have learned a plenty of non-operating items. So from the non-net profit, you will be adding back all the non-operating items. And remember, here second step, change in current assets and current liability except the cash and bank such as changes result in inflow and outflow of cash. We will discuss the second point. Earlier I have mentioned that from the net profit you need to add back all the non-operating items, and at the same time you need to deduct non-operating incomes. That part is almost similar to the preparation of fund from operation. And regarding the second point here, you can see that change in current assets and current liability has to be considered. We haven't done the same step in regarding the preparation of fund from operation in the fund flow statement. And what is the meaning of the second step? Because in fund flow statement, we began our computation from the schedule of changes in working capital. If you remember properly, we have dealt in numerous cases regarding that. In schedule of changes, what we are identifying? We are identifying changes in current assets and changes in current liability. Likewise, you need to also consider the change in current assets and current liabilities except the cash and bank. We will discuss that part in the coming session. For the time being, understand change in current assets and current liabilities has to be considered while preparing cash from operation using indirect method. Because in cash flow statement, we will not be preparing schedule of changes in working capital. But at the same time, you need to identify the flow of cash because of the change in assets and current liability. So you need to consider these items while preparing cash from operation using indirect method. Don't worry about it. We will discuss in detail that part. Okay. These two items has to be considered. Next one. In indirect method is followed when details of cash receipts and cash payments are not given. And C. Previously, I have mentioned that how we are going to identify a question if it doesn't mention about the method to be followed for finding out the cash from operation. The concept is very simple. In the question, if the cash receipts and cash payments are directly given, cash receipts and cash payments means items that appear in the direct method, that is cash from sales, cash from debtors, cash paid to creditors, cash paid for purchases, cash expenses likewise. If you come across a question where these items are given, then you can follow direct method, even if the question doesn't mention about the method. If such items are not given, instead of that you are given details of a non-operating items and as well as current assets and current liabilities, definitely you have to follow the indirect method. This is how you need to remember regarding which method or step has to be followed for finding out the cash from operations. So I hope you understand the concept. So let us discuss about the cash flow from operation using the indirect method. There is a separate format for identifying that. It is quite larger than, or it is quite compared to direct method. Indirect method, the contents of the indirect method is quite big, but it is quite easy. So this is how a cash flow statement for finding out the cash flow from operating activity. You may think that there are some of the items, there are many items in this case. Remember, this only comes for the first part of the cash flow statement. Remember, cash flow statement consisting of operating activity, investing activity, financing activity. Here, if you go through it, you can see that all these items are recorded so as to identify only the operating activity. Now we have to find investing as well as financing. We will discuss that part in the next session. For the time being, we will be discussing cash flow from operating activity. So the format for cash flow from operating activity is almost like this. Sometimes you may come across a question where you need to find out only the cash from operating activities. Under such cases, you need to follow this format and try to give, in that case, try to give the title as cash flow from operating activity. Actually, this format is taken from an actual cash flow statement. That is why here the title is given like cash flow statement. So whenever you come across a question where you are asked to find cash flow from operating activity, try to give that as the heading. Okay, cash flow from operating activity using indirect method. Just like the fund from operation, we will begin with net profit for the year. I hope all guys are aware about preparation of fund from operation. If you know the fund from operation very thoroughly, this step is very easy because we are following the same pattern again and again. So net profit for the year, add non-operating items such as depreciation, provision for tax, loss on sale of asset, goodwill written off, preliminary expenses written off, discount on issue of shares and images, transfer to reserve. Likewise, we have learned that part numerous times in the previous area. So I hope you all guys know that part. I am not going to explain it again and again. Once you added all the non-operating expenses, you need to deduct all the non-operating incomes. Non-operating incomes include dividend received, profit on sale of asset, and anything that comes under that category. So once you add back non-operating expenses and you have deducted non-operating income, you will get a value. That value is known as cash operating profit before adjusting working capital items. You may find it confusing, but remember, you need to write like this: cash operating profit. Here I is correction, it's a spelling mistake. Cash operating profit before adjusting working capital items. That means by adding back non-operating expenses and deducting non-operating income, you will get cash from operations, but this value was found out before adjusting working capital item. Working capital item is current assets and current liability. That is why we are writing in a peculiar sentence like this: cash operating profit before working capital item. You have got the value after adjusting non-operating expenses and non-operating income. Once you written down that value, now you have to go for the current assets and current liability. And how you are going to find, or how you are going to write down the difference in the current assets and current liability. You are going to write down or the extract the amount of current assets and current liability on the basis of difference in the first year amount and the next year amount, just like a comparative balance sheet statement which you have come across during a fund flow statement. You need to add back decrease in current assets. Why we are adding that decrease in current assets? And remember one more thing, while writing here decrease or increase, whatever it is, current assets, current liability, current assets, current liability, remember you need to consider all current assets except cash and bank, and sometimes bank overdraft. We will discuss regarding the adjustment of bank overdraft in the future class. Remember, while preparing cash flow statement and while writing down the decrease or increase in current assets, never take cash, because we are preparing cash flow statement to identify the inflow or outflow of cash during the year. So don't take cash under current assets. You can take all current assets except cash, because this is a cash flow statement. That's why we are not taking cash. And regarding decrease in current asset, why we added decrease in current asset? Remember, for example, one of the example that comes under current assets is debtors. If there is a decrease in debtors, it means the debtors had paid their debt. That is, debtors might have paid back the amount that is lended from us. So whenever debtors is reduced or a current asset is reduced, it means cash flow within the business or cash inflow of cash. We will try next example, stock. Stock is a current asset. When the stock is decreased, it means the stock might have sold off. So whenever a stock is sold out, it means we have got some cash by the sale of stock. So it is an inflow of cash. So whatever sources from which we are getting cash will be added, and whatever areas in which our cash is dispersed is deducted. So decrease in current asset is an inflow of cash. So we will add. Next one, increase in current liability. How an increase in current liability is added? Because remember, creditors is an example of current liability. So whenever the creditors increase, it means we might have borrowed cash from some suppliers. So when cash is borrowed from suppliers, the cash balance in our hand is increased. So whatever the activity that increases our cash flow or that causes inflow of cash is added back. So decrease in current asset is added, increase in current liability is also added. So what will be the items that are deducting? Increase in current asset and decrease in current liability. If you understand the concept of adding, you will naturally understand the concept of lessing. So after adjusting these working capital items, you finally get cash from operation this amount. Wait, this is not the actual cash from operation. Since you are running a business and you have generated income from such an activity or business, you are liable to pay tax. So you need to deduct income tax during the year certain amount. And finally you will get an amount which is known as net cash flow from operating activity. So this is how you need to prepare a cash flow statement regarding the computation of cash flow from operating activity. And during the computation, we will discuss each individual items and the adjustment regarding each item. So for the time being, let us wind up the session. We will discuss in detail the further cases or the parts in the future sessions. So just go through it, familiarize the format and the concept. We will discuss further in future. So that's all for today. Thank you. Previously, we have discussed about preparation of cash flow from operating activity. So let us discuss in detail the actual contents of cash flow statement. We now discussed only 1/3 of the cash flow statement. So let's go to the next part. format of a cash flow statement. This is the actual format of a cash flow statement, and the first part includes cash flow from operating activity, and we have discussed in detail all the contents of the cash flow statement, especially the cash flow from operating activity. See, net cash flow from operating activity till this point is the first part of cash flow statement. Next part is cash flow from investing activity. It consists of sale of fixed asset, purchase of fixed asset, sale of investment, purchase of investment, and this mainly includes fixed assets relating to the concern, either purchase or sale of fixed asset. Apart from fixed asset, you might record some extraordinary items like interest on investment or dividend received regarding investment. Usually it is a scarce item. Most common item will be the interest on investment. And once you find out the net cash flow from investing activity, next part is, and the final one, cash flow from financing activity. Financing activity mainly includes fixed liabilities, that is issue of shares, redemption of preference shares, issue of debentures, redemption of debentures, loans raised, loans repaid, interim dividend paid, final dividend paid. Usually it consists of long-term liabilities, mainly fixed liabilities. Some of the extraordinary items are interim dividend paid likewise. Usually these items will be given in as an additional information in the adjustment. We will discuss that part while dealing with the problem area. So net cash flow from financing activity, you have to find out the total. So likewise you need to find the totals of these three areas. Once you found the totals of these three areas, you need to again show a total amount like net cash flow during the year. Net cash flow during the year is 1 plus 2 plus 3. 1 plus 2 plus 3 means 1 is net cash flow from operating activity, 2 is net cash flow from investing activity, and 3 is finally net cash flow from financing activity. So once you add these three amounts, sometimes the amount may be positive or it may be negative, because during the year there might be inflow or outflows. So net cash flow during the year is 1 plus 2 plus 3. That amount has to be shown here, and from that you need to add back opening balances of cash or cash equivalents. Cash equivalents means market securities, government securities likewise. Usually it will be cash and bank balance. So why we are adding back opening cash or bank balance? Because previously you have taken the total of three major activities, 1 plus 2 plus 3. If you add opening cash or bank balance with that total amount, you will get an answer that will be exactly equal to the closing cash balance during the year. See, for this purpose only, we are not including cash while taking an items of current assets. Previously I have mentioned that while taking current asset, you have to neglect cash. Why we neglected cash is, in the cash flow statement there is a final and crucial step, that is, with the totals of all the amount you need to add back opening cash and cash equivalents, so as to get the closing cash balance and cash equivalents. If you are getting the balance amount exactly as the amount shown in the balance sheet, your answer will be correct. That is the concept of preparing cash flow statement. So these are the various concepts. Now let us discuss in detail each part. This was the first section, or 1/3 of the cash flow statement, that is preparation of the cash flow from operating activity. I hope you know all these steps, and it is almost similar to the steps which we have prepared in the fund from operation as well as fund flow statement. The only thing differs is the preparation style and statement preparation. All other concept and principles is almost similar to the fund flow statement. So this is the first part, and we have discussed it. We are not going to discuss it again and again. First part is this one. Second part is cash flow from investment activity or investing activity, it mainly consists of purchase and sale of fixed assets. Not only fixed assets, it also includes some extraordinary items. I have mentioned that part. So once you add together all these, you will get net cash flow from investing activities. And remember, see, here some items are shown in brackets. It means cash outflows. Whatever sources from which we are earning cash is an amount of as a positive amount, that is shown as the 2x, and all those cash outflows is considered as a negative amount, so it will be shown in the bracket. So instead of showing a negative sign, you will be putting brackets in the two sides of that particular amount. So this is by taking the grand amount, grand total, you will get net cash flow from investing activity. And remember, you need to deduct this amount within the brackets, then only you get the net cash flow. And finally, cash flow from financing activity. Actually, financial activity only come up to this part. See, net cash flow from financing activity, and from here you are preparing an additional step so as to measure whether your computation was right. Once you take the totals of all these three areas, you need to add back opening cash and cash equivalents, then you will get an amount which will be exactly equal to closing balance of cash and cash equivalent. That is the concept. And in some question you might see that in the asset side there will be cash and bank. So how we are going to take that? It's very simple. Add opening cash balance and bank balance. That is, if you have a cash amount 5,000 and bank amount 10,000, add these two amounts together, then the amount will be 15,000. That is the concept. We will discuss that part while dealing with the problem, then you will get a clear picture. So this is the actual format and concept or preparation for cash flow statement. So from now on, let us go to the application level cases. This is the overall statement. Just go through the statement, remember and familiarize the concept, because it is a compulsory statement that has to be prepared as per the accounting standards. So the format has to be maintained properly. It's very simple. You just go through the items and familiarize each step. And for the note, some extraordinary receipts like dividend received, refund of tax, etc. may be shown under operating activities. Previously I mentioned that dividend received is considered as an income from financing activity. And remember, the items stated in the note usually given in the additional information part or adjustment part. So likewise, the items shown in the additional information or adjustment has to be shown twice in the statement. Likewise, the dividend received has to be shown in the operating activities as well as an item in the financing activity. Refund of tax is exactly the similar item. So just go through these items and we will discuss that part during the application level cases. Income tax paid is shown under operating expenses. We all know that is that concept because it is an important item in the operating activity statement. Dividend paid is shown under financing activity. We mentioned that area. Here this is the dividend received is shown in the operating expenses activity. Here dividend paid. So see the difference. Cash from operations can be ascertained using direct method. There are two methods, the direct method and indirect method, and we have discussed briefly regarding cash flow from direct method. So let us try out an example. Cash flow from operating activity using direct method, only the operating activity. The question is given. From the following information, determine cash flow from operating activity using direct method. And we have discussed about the concept of preparation of cash flow statement from direct method. And it is a very easy method. As the name suggests, we can directly take the amount into the statement. But the thing is that sometimes the details may not be exactly given in the question. In that case, you have to prepare some adjustment statements.
See, in this question, trading and profit and loss account is given, and as an additional information, some item is given as opening as well as closing. So, whenever a cash flow statement, especially a cash flow from operating activity, has to be computed, and in the same question, when some items opening as well as closing balance is given, so there will be some sort of adjustment preparations. So let us see how we are going to solve this one. Cash flow from operating activity, direct method. This was the question. So for the direct method, we all know it begins with cash sales, cash received from debtors, and from that you will deduct cash purchases, cash paid to creditors, some operating expenses, and some direct expenses. That was the contents of the cash flow from operating activity using direct method. It seems simple, but the thing is that in a question like this, you have to prepare some adjustments in order to substitute the concerned amounts in the statement directly. Even though the name direct seems simple, some computation has to be made in order to find the answer. So what are the computations? Usually you will make necessary adjustment statements on the basis of items shown in the additional information, especially items whose opening and closing balance will be given. See, first let us begin with cash received from debtor, because it was one of the first and the main receipts that has to be recorded in the cash flow from operating activity. So how we are going to find the cash received from debtors? You can either prepare account of debtors, or you can prepare a statement which we are going to discuss now. See, in the question sales is given, so in the statement, since no information is regarding sales is stated in the question, no information regarding the sales means whether the sales is cash sales or credit sales, because in order to find the debtors we need credit sales. Since no information is given, we can assume that the sales given in the question is considered as a credit sales. So credit sales is 4,80,000. From that you need to add back opening debtors. In the question opening debtors is given 40,000. Then you will get an amount, and from that you need to deduct closing debtors. Finally you will get the cash received from debtors 4,64,000. This is the statement form for finding out cash received from debtors. You can do the same statement or the same adjustment by preparing a debtors account. It's very simple. Opening debtors, closing debtors. You know how to record opening debtors as well as closing debtors. And credit sale, where to record credit sale. And by balancing that account, you will get exactly this amount as the balancing figure, and it can be shown as cash received from debtors. Since you are familiar with preparation of ledger accounts during the fund flow statement module, you can either prepare an account or you can follow this statement. Anyway, just familiarize any one of the method and don't get confused. So this is how cash received from debtors can be found out. Next one, cash paid to creditors. Same pattern can be used here. Credit purchases. In the question you can see that no such information regarding credit purchases. If there is no information given in the question, you can assume that purchases given in the question can be considered as a credit purchase. Otherwise, the details regarding credit and cash purchase would have been given in the question. In that case, you have to mainly take credit items. From credit purchases, you need to add back opening creditors. In the question, opening creditors already given 28,000. And you will get an amount. From that you need to deduct closing creditors so as to get the amount paid to creditors. This is almost similar to the preparation of debtors. In this case also you can prepare the same by preparing a ledger account, and by balancing that account you will get the amount 3,08,000, same amount. You can follow any one of the method, it's up to your discretion. So this is how you are preparing cash received from debtors and cash paid to creditors. So next, what are the items that has to be recorded in the direct method statement? Cash received, cash sales. Since cash sales is not there, cash received from debtors, And in the payment side, cash paid to creditors, no information regarding purchases, so we can leave that. Next one, regarding expenses. There are operating expenses as well as direct expenses. And in the question, there are two types of details given: outstanding salaries as well as prepaid rent. So these are some of the direct expenses. And regarding outstanding salaries and prepaid rent, you have to prepare a statement just like the debtors and creditors. Before that, you need to identify why this outstanding salaries came. It is related to a salaries item, and make sure whether the salaries item is given in the statement. See, here also given. So let's just begin with salaries amount. Salary, we are going to find actual salaries paid during the year. You may think that here 40,000 is shown here, but we need to find the actual amount during the year. In the question, as per the details given, it is said that 40,000 is the salary paid as per the P&L account. So I will discuss in detail why this 40,000 is not taken as an actual salary paid during the year. In the question, outstanding salaries, there is 4,000 at the beginning and 6,000 at the end. You need to add outstanding at the beginning, and you will get an amount, and you need to deduct outstanding at the end. Then you will get an amount 38,000. So actually 38,000 was the amount relating to that particular year. Earlier I have said that in the question it is said that rent paid during the year is, salary paid during the year is 40,000. 40,000 might have been paid during the year, but 40,000 out of which 40,000, some of the item does not belongs to that particular year. In order to find the actual cash flow during the year, you need to take only items pertaining to that particular period. This is as per the one of the concept of matching principle. Actually, it is one of the matching principle, in which we are taking only those items that are relating to that particular year. And regarding adding outstanding at the beginning and lessing outstanding at the end, the concept regarding that adding outstanding at the beginning is, in the first day of that financial year, there was an outstanding balance of rupees 4,000, and naturally this 4,000 will be paid during that period. So that payment was during that period, so it has to be taken. And outstanding at the end means at the end of that particular financial year. So 6,000 was at the end of that particular year, and by the last day also the 6,000 was not paid. So the payment will be made in the next year. So it's not during the period. So we are doing like that in order to identify the actual cash flow during the year. Only payments made during that particular year is considered to be the part of the cash flow activity. Likewise, rent. In this rent case, it is actually prepaid rent. So how we are going to find out the actual rent paid during the year? Rent paid during the year is 20,000. So in order to, we need to find the actual paid during the year. Let's prepaid at the beginning. See, in case an outstanding we added at the beginning amount, but in case of a prepaid case we are lessing the beginning amount. Why we did like that? Because here prepaid at the beginning means, in the first day of the financial statement, it was said that 4,000 was prepaid. So that amount was paid in the last year, and the payment was not during that particular year. So we need to deduct 4,000. And you need to add back prepaid at the end. Prepaid at the end means in the last year we had paid for the next year. So the payment was made in the current year. It may be relating to the next future period, but the payment and the cash flow happened in that particular year. So prepaid at the end has to be added, and the prepaid at the beginning has to be deducted. So this is how you need to deal with various items like creditors, debtors, expenses that are outstanding and prepaid. You can either prepare an account or you can follow the statement which we have discussed now. So we have almost extracted items that has to be required for preparing a cash flow from operating activity using direct method. So let us substitute all this amount in the statement Cash flow from operating activity, we will begin with first item, cash sales. Since there are no information regarding cash sales, we can leave that cash sales is nil. Next one, cash paid to debtors. We have found that 4,64,000 was received from debtors. So total receipts during the year is 4,64,000. From that, you need to deduct various cash expenses. Cash purchases, nothing is given. Cash paid to creditors, 3,08,000. We have already found 3,08,000. Next one, other operating expenses, salaries paid, 38,000. See, 38,000 we already found. Next one, rent paid, 22,000. This is also recorded. So once you take the total and deduct this 3,68,000 from the receipts, you will get the amount of rupees 96,000. That was the actual cash flow from operating activity. So this is how you have to prepare a cash flow from operating activity using a direct method. And remember, in the case of absence of information regarding cash sales and cash purchases, all sales and purchases are assumed to be made on credit. That is an important note. Remember it. So this is how you have to prepare a cash flow statement using a direct method. So we will continue with the remaining part in the next slide. That's all. Thank you.